Hello and welcome to the look ahead for Thursday, the 25th of January with me, Fiona Cincotta, Senior Market Analyst at City Index. So earnings season is ramping up. We've got some more numbers to be watching out for tomorrow. LVMH in Europe and Wizz Air will be in focus, as will Visa and Intel over in the US. Now, earnings season has got off to a pretty strong start as far as tech stocks is concerned. We've had some chip makers reporting. We've also had Netflix out, and the optimism surrounding these results. I mean, Netflix jumped up 10% today, helping the S&P and the Nasdaq reach yet another record high. Just having a look at the chart here, we can see the Nasdaq. It's breaking above that 17,500 round number, heading towards 18,000. Just watch out for the RSI, which is in overbought territory. So often we see some level of consolidation or even a pullback with the overbought RSI. As far as the levels to be watching out for, I think it taken fall below that 17,000 level, which was the December high, to negate the near-term uptrend. So just having a look then onto the economic calendar, we've got German IFO business climate data. There are some sort of signs. This is expected to come up in slightly ahead of where it was previously, expected to come in at 86.7, up from 86.4. Also saw the PMIs for Germany come in slightly improvement there, still in contractory territory. These could be some signs that the downturn in the German economy is starting to bottom out. But looking at the DAX, you wouldn't really have too many concerns about the health of the economy showing through there. I mean, the DAX is looking to make an all-time high as well. It's rebounded off that 50 SMA that we see there, pushed on higher. It's taking out resistance at the 16,800 level and is looking towards 17,000, which will be resistance on the upside. And that would take the DAX to a fresh all-time high. On the downside, there is some support there at the low that we saw around the 50 SMA. Also, big day tomorrow for the euro as well. We've got the ECB interest rate decision. Now, the ECB are not expected to adjust interest. The monetary policy going to leave interest rates on hold at 4%. And that's despite sort of signs that inflation had been cooling towards that 2% target, but has just ticked higher recently to 2.9% in December. Now, we also saw PMI data come through for Eurozone today. Slight improvement again on the business activity, the composite PMI, but still very much in contractionary territory. You know, I think basically the ECB is going to want to have more time to see, you know, how the Eurozone economy is performing. There is still a lot of uncertainty, a lot of risks, particularly with regards to potential supply chain issues in the Middle East, which could push inflation up again. They're going to really want to make sure that inflation is trending towards that 2% level before they start to give any hints and tips about when they're going to be cutting interest rates. Now, just to have a look, sorry, bear with me, at the euro versus the US dollar. Now, the really interesting level here is the 200 SMA. You know, we can see for the past, well, since the start of the year, the pair has been really sort of, you know, testing around that 200 SMA support level. That's at the 108.45, around there. If we do get a break below that level, we did have a slight break yesterday, but it spiked back over to close above the 200 SMA. We really need to close below that in order to move towards the 100 SMA, which is down at the 107.50 level. On the upside, buyers are really going to be looking towards that 110 level if they want to make any sort of attempts at a higher high. Also, a big day tomorrow for US data. I mean, it's been quite interesting. The US dollar has been a little bit lacking fresh catalysts this week. Focus has been very much on the data that's going to be coming tomorrow and Friday. Tomorrow, we've got the US Q4 GDP figures. Now, we're expected to see growth of 2% quarter on quarter annualized. That is down from 4.9%. So it's definitely slowing growth. But it is still growth. And, compared to perhaps other sort of regions and economies, that's doing pretty well. We've got that sort of downturn or appearance of gloomy economy in the Eurozone and also in the UK. So, the other thing to keep in mind is I think, recent data from the US has been encouraging. And we saw retail sales come in better than expected last week. We also saw that consumer confidence was stronger than expected. So, if we do get some more strong data, that's really going to support that narrative that the US is heading for a soft landing. And also, it will see the market push back on those Fed rate cut expectations. The market is no longer expecting the Fed to cut rates in March. So that's been priced down now quite considerably to below 50%. And the probability of a March rate cut had been up at 85% at the beginning of, in the end of December. So, really quite a large repricing there. What we're watching here is the US dollar, Japanese yen. This has had some really interesting moves this week after the Bank of Japan hinted towards the hawkish pivot potentially in the March meeting. This is actually sooner than what the market was expecting. So we've seen this real strengthening in the yen after it had been weakening across the start of the year as the market sort of been pushing back on those hawkish pivot bets. So if we can get a lift over, buyers are going to be looking for a move over the 148.80 sort of 85 level to bring in 150, the round number, into view. On the downside, if we can get a move out of if sellers can take out today's low, then that's going to be a really important move as we head towards that 200 SMA. Hope you've enjoyed what you've been watching here. If you have, then please give the video a like and do subscribe if you'd like to receive more content like